Hello, welcome to this lecture. In this lecture, we'll continue with Unit 3, Session 3. And in this session, we'll be looking at initial measurement of PPE. In Session 2, we look at the recognition of PPE. When should we recognize PPE in our books? And in this session, we're looking at the initial measurement of PPE. At the end of this session, you should be able to determine the cost of an item of property, plant, and equipment, then apply the knowledge to solve practical examples or practical questions. So this is what we are going to do in this session. Initial measurement of PPE. An item of property, plant, and equipment that qualifies for recognition as an asset shall be measured at its cost. So it shall be measured at its cost. And these are the elements of cost. When we are talking about cost, it's made up of the purchase price less any trade discount or rebate. The purchase price less any trade discount or rebate. So the amount you are buying the item, if you are giving any discount, you take it out, or any form of rebate, tax rebate given to you, you subtract that one also out. Then we also have import duties and non-refundable purchase tax. So if you are importing the items, you pay for the price of the item as well as paying import duties during clearance at the port. So this cost and those that will not be refundable to you in terms of taxes and co must be added to the cost. Then any cost directly attributable to bringing the asset to the location and conditions necessary for it to be capable of operating in the manner intended by management. All these costs that are directly attributable must be capitalized or must be added. The initial estimate of the cost of dismantling and removing the item and restoring the site on which it is located must also be part of the initial measurement of the asset. So you are into construction, and when the project is given to you, the contract is awarded you go and put up some temporary structures and co. After you are done, you have to dismantle those structures, and the cost, the present value of those dismantling costs, which will be done in the future, find the present value and add it to the cost now. So we want to look at examples of directly attributable costs that are directly attributable to the asset. We have cost of employee benefits as defined in IAS 19 employee benefits, arising directly from the construction or acquisition of the item of property, plant, and equipment. What we mean by this is that we need labor. You need human beings to be able to work on some of the assets if it is construction. So the cost of labor, how much you are going to pay them in the construction process or in buying, the people you pay to make sure they deliver the goods to its intended place, you have to capitalize it, and it forms part of costs that are directly attributable to the asset. Then we have cost of site preparation. The cost of site preparation. You want to undertake a project and you have to go and prepare the site. You add it to that. Then we have initial delivery and handling cost. Initial delivery and handling cost, they must also be capitalized. Then installation and assembly cost. Installation and assembly cost also form part of directly attributable cost. Then cost of testing whether the asset is functioning properly after deducting the net proceed from selling any items produced while bringing the asset to that location, and conditions such as samples produced with testing equipment and any other professional fees paid, could be consultation and co-paid to an expert, also form part of directly attributable cost. Now, costs that are not PPE items or non-PPE cost items, those that you cannot capital. So cost of opening a new facility, you don't capitalize it, you expense it. Cost of introducing a new product or service, including cost of advertising and promotional activities. They are expense item, profit or loss. Cost of conducting business in a new location or with a new class of customer, including cost of staff training. They are also non-PPE cost items. And D, administrative and other general overhead costs. Administrative and other general overhead costs, they are also expensed rather than capitalized. Now let's look at self-constructed asset. Self-constructed asset. The cost of a self-constructed asset is determined using the same principles as for an acquired asset. So the same principle, when you went and buy the asset, the cost you incurred, you do the same thing when you yourself you are putting up the asset now. Then we have any abnormal cost incurred by the entity should be expensed. Any abnormal cost in the process of constructing the asset by yourself should be incurred, should be expensed by the entity. So let's say there is an industrial strike action. As a result, your employees couldn't work, but you have to pay them. You need to expense those ones. Let's take an example and apply the knowledge we have acquired now from the recognition to the initial measurement. We said Dumfo Limited is installing a new plant at its production facility. It has incurred these costs. 1. The cost of the plant, that is cost per supplier's invoice plus taxes, is 2.5 million Ghana cedis. 2. Initial delivery and handling cost is 200,000 cedis. Cost of site preparation 600,000 cedis. Consultants used for advice on the acquisition of the plant 700,000 cedis. Interest charges paid and the supplier of plants for deferred credit 200,000 cedis. Estimated dismantling cost to be incurred after 7 years is 300,000 cedis. 7. Operating losses before commercial production 400,000 cedis. Required. Advise Dumfo Limited on the cost that can be capitalized in accordance with IAS. So you have to advise the entity on the cost that can be capitalized in accordance with IAS 16. Now we have 7 main items here. How are we going to treat them? So in doing it, when you look at the first one, the cost of the plant from the supply is 2.5 million, and this is the cost. When we are looking at the elements of cost, say the purchase price. So this 2.5 million is the purchase price, so we capitalize it. As part of the element, we have the directly attributable cost. We have initial delivery and handling cost of 200,000. It must also be capitalized. Then the third one, cost of site preparation, is directly attributable, 600,000, must also be capitalized. We have consultant fee paid, and here it is the professional fee must also be added. 5. The interest charges paid to the supplier, 200,000. It is an interest charge for a deferred credit item. It is not directly related to the installation you are doing. So this 200,000 is not supposed to be added to the value of the asset, but rather must be expensed, sent to the income statement. Then we have the estimated dismantling cost to be incurred after 7 years. So they have given us the value. We presume this is the present value of 300,000. So we capitalize it. Then 7. The operating losses before the commercial production. It can't be added to the cost, but rather must be expensed. So this is how the solution looks like. The cost of the plants, 2.5 million. The initial delivery and handling cost, 200,000. The cost of site preparation, 600,000. A consultant fee of 700,000. And then the dismantling cost, 300,000, giving a total of 4.3 million. So your initial measurement for this item is going to be 4.3 million at the initial measurement. Then subsequently, you have to depreciate it at the end of the year. So this is now becoming the cost that you can recognize in your book. This is now the cost of the asset. There are other examples in the book. Try as much as possible to solve them to get the understanding, the various ways you can calculate for the initial measurement of an asset. Now let's come to exchange of asset. You can exchange an asset for an asset. Now when these happen, exchange of assets are measured at fair value. So you measure the fair value, which is the amount at which you are what? Exchanging the asset, the amount prevailing in the market. If not, if you can't get the fair value of the asset, then the asset you are exchanging must be measured at the carrying amount of the asset given up. So you are giving an asset to receive an asset, so you are swapping. If the value of the asset that is coming in now, you don't know its value, you are basically saying that you have to measure, you have to look for the value of the asset you are giving out now. You are giving out to take a new one. Then you use that same value to measure or to record for the new one that is coming. Then expenditure incurred in replacing or renewing an item of PPE must be recognized in the carrying amount of the item. So if you are incurring any other cost in exchanging the asset or in selling it, you have to add it to the cost, because it's the cost that is directly. If you are not doing that transaction, you are not exchanging that, you are not disposing that, you are not going to incur that. So as a result of you doing and you are incurring that expenditure, you have to capitalize it. The carrying amount of the replaced or the renewed item must be what? Be recognized. So you have to de-recognize the old items that what you have in your books. So you have to credit the account with that amount to de-recognize it from your book, and then we'll recognize the new one that comes in by debiting it. Okay, so that is how we deal with the exchange of assets as well. So in this session, we've covered the initial measurements of PPE, We look at practical example, and then when it comes to exchange, how we are supposed to measure it. We will continue in session 4 to look at the accounting for PPE, once again the subsequent measurement and co. Till we meet in the next session. Thank you.